Hi, this is Zach Meir with the Bulletin Board Heroes here at Zach's Traders Cafe for Wednesday, the 2nd of August. Starting off with the FTSE 100, where we failed again at that February resistance line, failed just below it. In fact, that was a slight feeling that might happen, and at least a test of the rising 200-day moving average around 75.90. Need to have an end-of-day close back above that to avoid a further fall, maybe down as low as the July breakout level 74.50, which was that break of that June resistance line. Obviously, the FTSE susceptible to any bad news around the world and not reacting to any good stuff. In this case, obviously, it was the US credit downgrade. Moving on to the DAX, and suspect it will be a similar picture here. Here we were also fearing that we might need to have a test of the 50-day moving average at around 16,000. Below that, there's the floor of the rising August 2022 channel around 15,700, but that's the worst we're looking at the moment. In terms of recovery, we want to see an end-of-day close back above the bulk of July's resistance at 16,200, so maybe the DAX can oblige. But at the moment, I suppose it does look as though we'll get an end-of-day close below the 50-day line and then fall to the floor of that channel. RSI now below the neutral 50 level at 46, which again is a leading indicator on a potential dip. On to the Dow, which has been the better of the three markets in the recent past. The risk here, obviously, of a test of the old March resistance line target, 35,200, and below that, then we're risking as low as 34,500, but not expecting worse than that at this stage, even though the 50-day line is there rising at 34,100. On to Bitcoin, which was looking a bit ropey even before that credit rating downgrade, but had a bit of a bounce, bear trap rebound from below a very sharply rising 50-day line, so that's looking encouraging. We've also broken that line of resistance from last month, 29,300. Above that, we've got a chance of retesting last month's resistance towards 32,000, but let's see if we can get another day or two above the 50-day line to cement the possibility of a turnaround after about 6 weeks on the back foot. On to the stocks, and mostly repeats today because I haven't got any sharp new rises. First one is coming up with Allergy Therapeutics. Here the shares creeping up on an almost daily basis, which is quite amazing. We've broken through the 50-day line yesterday. That was around 3.25 pence, and we've been looking for up to 4.7 pence at the top of that rising trend channel from back in June. Upside certainly in place while we remain above that late June peak at 3 pence. Moving on to one of the stars of last month, Blackbird, which is rising on certain speculation. The current situation is that we managed to exceed our first target there at 11.75 pence and hit the second one there around 14 pence, at least while we're above 11.5. Still looking for as high as 20 pence by the end of this month. The bear trap started the rally below the 6 pence level last month, and bullish divergence there as well. On to Canadian Overseas, which is included because it still has one of the best setups at the moment, which seems obviously rather unlikely given the recent history of the company. But here we had a bear trap gap reversal, unfilled gap to the upside in the latter part of last month, and bullish divergence backing the recovery, which has been okay. We'd like to see the shares above the 50-day line at 2.9 pence and also hit our initial target there, 3.25 pence. Hopefully that'll happen over the first part of August. Best case scenario, maybe over the next 4 to 6 weeks, is up to a June resistance line projection at 4.3 pence, but we need to hold neckline resistance at 2.25 in the interim. If that breaks, then the picture would change. On to future metal, which doesn't get too many looks here, but we have it here today as a bear trap gap reversal. And the current situation is that we're looking for the shares to head up to the top of that falling wedge that we've got there at 2.3 pence. Above that, we could get up to 3.25 pence as soon as the end of this month, backed by a bullish divergence line and obviously the bear trap gap reversal there. So two strong plus points there after a temporary new low was put in place below 1.8 pence. The stock, which obviously doesn't look like the most liquid one in town, but giving it a mention on a rather dull day, Grand Fortune, which delivered a bear trap from below the March-May support there around 0.9 pence. Above that, we're looking for the best case scenario target as high as 4 pence, retesting February resistance and heading to the top of that broadening triangle from back in August last year. Upside valid at least while we're above support resistance on the way down, rather, at 1 3/4 pence. Above 1 3/4, looking for 4 on Grand Fortune. On to Mode, which has risen from the dead over the last few days. Here, decent consolidation actually after yesterday's big up day. The support found actually just above the old resistance on the way down, around 1.6 pence. Above 1.6, looking for a best case scenario target here at 4 pence by the end of the month. But obviously remember here, the track record of the shares hasn't been great. You can see many full storm rallies in the recent past. And obviously this could be another one of them, but at least we have that stop loss there at 1.6 pence as a decent anchor. Moving along to one of the stocks of the year to date, I think one can say, without being contradicted, Ondo. Here making good progress above our recent target at 34 pence, up above 34 pence, and that resistance line, top of that channel there from March, looking for as high as 45 pence by the end of this month, and that V-shaped bull flag, a very useful feature, especially the way that we closed above the July high yesterday, so early in the month, and also are making good progress above it today. Onto a stock which doesn't have much charting information, but here we have Aura Technology, obviously on the Aquis market. One has to be nice to these companies. It looks as though we're in a rising trend channel from the end of last month. Floor the channel around the 5.5 pence level, and above that looking for up to 9 pence by the end of this month. Stop loss, probably the best you can do is just have that near the 4 pence level, which is the current position of the 50 and 200 day moving averages. Another stock which is had been a highlight in the recent past is Optibiotix, and here the suspicion that yesterday, the suspicion was that yesterday we were ready to push higher, and that has happened. Found support at 25 pence, above 25 pence, looking for as high as 52 pence by the end of next month. So let's see if the shares can step up to the plate, hopefully 40 plus later this month. The other positive to note is the way that both the 50 and 200 day moving averages are now rising, and the run up to a golden cross tends to be the strongest part of the cycle, over and above the fact that we've had an unfilled gap to the upside last month. So everything looking very positive there at the moment at Optibiotix. Also looking positive is Streaksai, and here you can see that we broke last week. We broke the top of that broadening triangle from back in January. That was around the 2.6 pence level, and above 2.6 we're looking at the top of the 2023 triangle as high as 4.3 pence. And that might happen as soon as the end of this month, especially if the 200-day line starts curling up, as the 50-day line is already doing. Another stock on Aquis is TAP Global, and that's doing rather well at the moment as well. Decent recovery there for the shares after the brief dip below the 2 pence level. The current view is at above June resistance, around 2.6 pence. We're looking up to 3.6 pence on the top of that broadening triangle from the end of March, as soon as the end of this month. Nice that the 200-day line has now joined the 50-day line and rising, so we should be in a golden cross situation sometime later this month. Onto a requested stock from a very keen, dedicated follower, Tasty. Here you can see that we've broken out of this falling wedge. That's been in place since basically April. The top of the wedge there around 2.2 pence. Above that we're looking for 3.6 pence by the end of this month. An end of day close above the 50-day line today would be a nice confirmation, or a nice indication that the shares are ready to head up to 3.6 pence over the next few weeks. Just a couple of followed stocks at the moment, highly followed. First is Upland, which initially broke our target there at 1.5 pence, and yesterday had a decent run up towards 2.1 pence, I think, the peak there, or 2.15. The current situation is that we're looking for the shares to push back, give us an end of day close above 1.5, and then that would reinstate the best case scenario target of 2.6 pence by the end of this month. Support coming in at old resistance, so the initial highs here around 1.1 pence, and support's coming in just above that level. So that looks as though, at least while we're above 1.1, we are relatively confident that 1.5 and then 2.6 will be delivered in a decent fashion. Finishing up with VAST, which didn't have a fundraise today, which should be some relief, at probably 6%. A bit stingy, I think, from the market, given that there was no fundraise. But we do have support there around the 0.3 pence level. That's above old November to January resistance around 0.27. So I suppose that is a plus. And while we're above 0.3, looking for the shares to fill that gap there up to 0.4 pence, even if they fail again after that. That's it from me today. More updates tomorrow.